Let's put it on the screen share. Today, we're going to do the Chapter 7 practice exam. And then we're going to start Chapter 9 of Handout. And Chapter 9 is going to be the last chapter we do. Excuse me. I will also be sending out abbreviate. Oh. Hold on a second. All right, so due on April 28th. So I'll send that out after class. We'll start on the Chapter 9 handout, and then that'll be it for the quarter. So the next week is our second to the last week, and then and then last week is our last week. Write that down. Last week is the last week. You guys got that? All right. I'll say it again. All right. So today we'll do the practice exam, and the practice exam is part 1 first, which is this one. And I will start the polling. Now, the polling is going to be a little bit different nowadays. Not because of this class, because I had other classes I had problems with students not taking it seriously. So anyway, the polling is not anonymous. Now, no one else in the class will know what you did, but I will know who put what in. But I'll take it as a group for the class. You know, whatever the class is. Usually the class scores are better than individual. It's just there's a mathematical reason for that. But if you're wondering why teachers a lot of times put people in groups, that's why. That usually groups give better answers than individuals. It's kind of the idea behind democracy, although it's probably, I don't know if nowadays that works so well. But anyway, so again, your whatever you put in, I will know who put in what, and you'll get the extra credit points if you submit for the practice exam. If you don't submit, you don't get the extra credit points. And also, I can see who turns in, who puts in what. So if you put in, and actually this actually happened, I assume they put in a bunch of E's for the solutions for a test or a practice exam similar to this. There is no E. So anyway, so I'll be able to see it. And 2, if there is somebody that just puts in random kooky answers, I will not let that drag down the whole class. But anyway, so I'll launch the poll. And again, only those people that actually answer the poll will get the points. And no one else will see your answer. No one else will know what you put in. It'll just say guessed when I share with a group. But I'll know, and that's why I'll assign the extra credit points. Okay, so there. Oh, and problem number 3. This one I think we talked about a little bit, but it'll be extra credit on the test. Is there anyone that did not get the practice exam part 1? Okay.
Professor, for the quiz, it was only is it only 6 questions? Because the one I got in the email only has 6 questions.
Yeah, yeah. Well, there's only 6 questions. So the last, so 7 through 10, there actually is a, what I think where it was called. No question exists. You can click on. Actually, you can click on
Okay.
anything for 7 through 10 because I'm not going to count them.
Yeah, I
Okay, I
answered
was just double checking.
the no question exists ones for those.
Yeah, and that's why I put those
Okay.
on there.
Okay, cool.
You have to be set up, yeah, ahead of time.
Thanks.
You know. Okay, is there anyone still working on it? Is anyone still working on it? You can either say something or else put it in chat maybe that you're still working on it. Just so I just want to know if we got 9 out of 11 so far. So I don't want to cut it off if people are still working on it. Anyone else that needs a little more time? Anyone else? Okay, I'm going to go ahead and close it then. Close the poll. Going once, going twice. All right. Okay, now I'm going to share the results here, and I want to. I'm pretty sure these should say guess. They shouldn't have your names on them. I'm going to share them. If they do say have you guys' names on them, let me know, and I will immediately stop the sharing. Are the names given out on these?
No.
I don't see
Oh, okay,
anything.
good. Okay, good. Okay, well, let's take a look-see here. First one is correct. A. So regarding uncollectible accounts expenses, not possible to know which specific accounts will not pay. Yeah, so if you knew which one would pay, you just write it off the accounts receivable. But because you don't, you have to estimate it. Okay. Number 2. For calculating accounts is a contra account to accounts receivable is correct. The one we didn't talk about, extra credit points, and look at that. You guys got the extra credit points. Yeah, the write off uncollectible accounts, because you've already reduced the value of the account. So when you actually find out which account is bad, it doesn't have any impact on it because you've already, it's sort of like you've already made the adjustment for it. Number 4. Yes. Now, actually D, I'm not sure who picked D, but whoever picked D, it doesn't show on my screen either right now. I have to save the results, whatever. But D is also one that is can be true. It doesn't have to be true, but it can be true, and that is that several times in a year, if they put out financial statements every month, for instance, they'll do the estimate every month. So if you pick this one, that's not such a bad answer. Number 5 is correct. B, if They fail to record uncollectible accounts expense. So if they don't record the expense, expenses are understated. Last one is B. This is correct. You guys have you got 4 on it plus 2, you got 6. 6 will be added to everyone who did this. So let me record that. Oops, that's not a 6. That's a 6. Okay, so you guys get plus 6 on that. Very good.
Professor, my computer froze. Can you let me know what's 1, 2, and 3?
Yes. Go back. A, D, and A.
Thank you.
You're welcome. Hey, wait a minute. I got a different class title on this thing. What do I do here? I think you guys the wrong one. Oh, brother. Sorry about that. This would obviously be for. Did I do the same thing? Let me check the other. I may have done this. It must have done on the second one too, right? I did it on the second one also. I apologize. This is not our class, in case you're wondering. Business 142 is not a class. That's a class that I taught at, where was it? Moraine Valley. Apologies for that. But, yeah. All right, so let me just save this before I do anything. Okay, stop share and okay. Let's go on to, I can't believe I did that. I guess I can. Let's go on to our Business 142 class, part 2. You know, I think I may. Yep, I did. Oh boy. Okay. I know what I did. The spacing in these accounts was off, so I went back to an original one that I had. I made up a similar one to this, but these I couldn't get the journal entry things right for this or for this down here. The formatting was messed up, so I went back to an old one I had, and of course I didn't update the name on it. Sorry about that. Okay, so let's go. So these are the regular questions, and these are very similar to what you had in the handout. Okay. So this is our accounts receivable. And those two accounts go together forever. And this is as you guys correctly noted, this is a contra account. Oops. So this is a contra account to accounts receivable. In other words, accounts receivable, we have 75,000 people owe us, but we're not going to collect that. So we're going to estimate what is not going to be collectible. And again, we have this allowance account because we don't know who it is. If we knew who it was, we'd take them right out of the accounts receivable. But we don't know who they are. So that's why we have this allowance account. And it's kind of a quirk because you have to make an estimate of it. Okay, so we make an estimate of our uncollectible accounts. And this could be from previous years. It could be an industry average. It could be whatever. But some way you're going to make an estimate of what accounts aren't collectible. And net sales is a common one. And I'm going to cheat and cut and paste here to get the net sales. Okay, so the sales were 600,000. However, people brought back, I think we got a little too far out. People brought back 10,000 of it. Oops. So this will give us our net sales. And by the way, you know, if you think about it, the net sales, these are the only real sales. You know, the 10,000 that people return, those are not going to be accounts receivable, right? If you're looking at accounts receivable, there's no accounts receivable for 10,000 of that because they returned it. So the net sales are just what's left. That's what we will do our estimate on. 2%. So 590,000 times 0.2, 0.02, I'm sorry. Time for Mr. Calculator. $11,800. So this will be our estimated uncollectible. Of that 590,000, we think we're not going to be able to collect 11,800. And so we're going to make an expense for that because we're going to try to keep the expenses in the same year. Doesn't give the year here. Well, whatever the year is. I mean, so we're going to make an expense for it. And then we're going to set up an allowance account. You know, there's already 1,200 in there, but we're going to add that much in there. And yeah, so that is, so we made a journal entry for that. So we're going to estimate what the expense would be. It's not going to be 100% correct, it never is, but it'll be hopefully close. Let's try that again. I'm sorry. Okay, there we go. See, I can write 3 words. All right. And this is our allowance. Oops. This is our allowance for uncollectible accounts, what I call doubtful accounts. Oh, maybe I gotta do that one for doubtful accounts. So expenses are always the debits. And so this is what we would estimate that it will not be collected. And then this is a contra account to the accounts receivable. So it'll be 75,000. There's already 1,200 in that account. There'll be another 1,100. Whatever that comes out to. Oops, 1,100 over here. That 13,000. Anyway, you're gonna tell the reader, look, don't expect us to get this much. We're not going to. It's going to be reduced by these, these amounts in the allowance for doubtful accounts. And we're going to expense it because the sale was made in this year, whatever year it was, and so we want the expense to be in that year. And again, the reason we don't know who is not going to pay it, that's why we have this allowance account. And again, for this, we don't know who's going to be uncollectible. So we have to make this estimate. If we knew who was uncollectible, first of all, we wouldn't have sold to them in the first place. But if we know who's uncollectible, we just write off the account. But because we don't know who it is, we got to say, okay, we're going to reduce our accounts receivable by whatever's in this account. And then we're also going to expense it. And this expense will be matched with this expense is matched with these sales. Well, not up here, I guess. So the sale and the expense will be in the same year. Yeah, it's one of those things that, it's really simple, but the actual hoops you got to jump through is quite a few. Any question on this thing? Okay. Let's go to the bank rec. Okay. Bank reconciliation is to find, well, first of all, the object of this is to the objective of the bank reconciliation is to find the correct cash balance. You want to know how much cash you have. And so that's kind of why we do this here. It's because of that. We want to figure out how much actual cash you have so you know what bills you can pay, how to plan for your cash. Okay. And we start with the bank side and the book side. Obviously, those are not the same, and we're going to add some to them and take some away. And basically, we correct the side that doesn't know. You know, there's something that the bank knows that we don't know. There's something that we know that the bank doesn't know. So we always kind of correct the other side. So if there's something the bank knows that we don't know, we correct our side, the book side. If there's something the bank doesn't know that we did, correct the bank side. Okay, so let's play which side? Deposits in transit. Where's that going to go?
The bank balance.
Add or subtract?
Add.
Yep. And this is it's a very common one. So if you're running a restaurant or something like that, what is the date here? 131. So if you're running a restaurant or something like that, you know, on January 31st, you probably had, you know, go to the bank and make a deposit. They probably aren't going to count that until following statement. Okay, Nsf check. It's a little bit of a tricky one.
Book balance.
Yep. Add or less?
Subtract, less.
Yep. And I'm going to explain this one too. So here's what this is. It's Nsf check. This was a customer's check. Okay, so we took this check, we thought it was good, and we deposited and put it in our cash account, thinking it was good. So here's what is kind of happened. Here's what is has to do with that the balance. This $2,400, excuse me, $240 is in that 1950. We put it in there thinking the check was good. Maybe even contacted the bank and it was good at the time, but whatever, when it was presented to cash, it's not good. Okay, we're not going to forget about the check, but we have to take it out of the cash, right? So our cash has this $240 in it that really doesn't exist, at least not yet. So that's why we have to take it out. The 240 is included in that 1950. So we have to take it out. And that's what we're doing down here. So the bank knows that it's not good. We just didn't know. We just found out we got our bank statement. Okay, outstanding checks. These are checks that we've written, but the people haven't deposited them yet, or they haven't cleared yet. So where are these going to go?
Bank balance.
Yep. And these will be less. They're checks, so obviously they're going to reduce the amount. And again, the bank doesn't know we wrote these checks. They won't know it till people start depositing them and clearing them. So we know that that is there, the bank just doesn't. And these are also, you know, these two deposits of transit and same checks, these are very common. Okay, bank fees. Oops. Where does that go?
Book balance.
Yep. And their fees, so it will be a minus. And there is no check for that. The bank just takes it out. No collection.
Book balance.
Yeah, I know it is similar to a check. And when they collect it, they're probably not going to call you or anything. They'll probably just put it in your account and be on your bank statement. I don't think we have this one. Yeah, check printing fee, $5. Where do you think that's going to go?
Book balance.
Yep. Yeah, it's similar to the bank fees, but it's going to be for checks. You can buy checks with it. Which, by the way, $5 is very reasonable. I don't know what I was thinking. But usually $50. What am I doing? Wrong spot. And which is why a lot of times it's much cheaper to get your checks made somewhere else. I think even like Sam, I know Sam's Club does, or Walmart maybe. I don't know. Okay, so that goes to the book. These are all book ones. Okay, and note interest income. So we had this note, we made some income on it.
Book balance.
Yep. Which is one of the advantages of the note. You actually can't charge interest on a check. The check itself, you can charge people separately for it. But okay, so here's what we're going to do. We're going to have a corrected cash balance, and both these sides should equal. All right, so have both sides up. Job for Mr. Calculator. So I think it should be that. Now I should get the same thing over here. There they are. And so here's what's going to happen with this, though, when you know, part of the reason why we do this bank statement is we want to find the correct balance. So this is the balance we have in our cash account right now, is a 19, you know, that. But we have to get it to this. And so for all these, I should, but for all these things on this side, you're going to do journal entries. Crazy here. Okay, so you're going to do journal. You're going to have journal entries for these. Yeah. Learn how to use a computer. Okay, here. So I'm making a journal entries for this. Sorry. So for each thing up here, you're gonna make a journal entry. So this will be cash, notes receivable, cash, interest income, and so on. You know, and over here, these will all be. So these will all be debits. Debit cash. And now here, these will all be credit cash. Because what's going to happen is you want this to be the ending balance. You actually, you don't have 1950, you actually have $2,115 in it. We're not going to put those on the test, obviously. But that is what you would do with those. You make journal entries. And you can't do that on the bank. The bank doesn't let you make. They don't let you go in there and change their books. Kind of selfish that way. Okay. So any questions on that? Besides, what is Class B US 142? Questions on that one? Okay. Well, let's go ahead and take a break. When we come back, we'll start in on chapter 9, which will be the last chapter we do, and that's gonna be on depreciation. I got something to add to show you guys. I think I found a meteorite, a large one. The reason I say that is it's metallic. You put a magnet on it and it'll stick to it. And I found it like in the middle of grass sitting there. But anyway, I don't know if anyone is familiar with these. But anyway, if you are, I don't know, it's really heavy. It's like a pound and a half. And like I say, I found it in the middle of grass, so I'm assuming it fell from the sky, although someone could have thrown it at me or something, I guess. But and then you know, a magnet sticks to at least some parts of it. It's like there's an outside part and then there's like an inside part of it. But weird. It's just and it's heavy. It weighs like it's like a pound and a half. Okay, so let's go to let's say be back at how about I'll say what, 7:05-ish, was it 7:05? I know, 7:03. Let's make it. Okay, so we'll be back at 7:03, let's say. Okay, so depreciation is gonna be the last chapter we cover in this class. Chapter 9, we will cover tonight. We'll get a couple of, there's 3 methods. We should get through 2 of them tonight, 1 more next week, and then probably end up doing some problems, maybe the practice exam next week. And that'll be the last thing we really do. I like to leave that last class open in case people have questions and need to catch up stuff. So anyway, hopefully by next week, we will have all that done. So yeah, so this will be the last one, the last chapter. Back to sharing. And do me a favor. So this is, you should have this long-term assets. And I want to go to the end of it. I have just some notes. So this is page 7. I'm just going to add one more note on here, but so one of the things about depreciation that is not always obvious when you first look at it, it's what they call an allocation. You're taking the cost of something that is usually significantly more expensive, and you're taking that expense and spreading it out over however many periods or years, in this case, you intend to use it. So if you buy a piece of machinery, in this case, the example is bought for $800 and has a estimated life, again, as an estimate. You find a lot of estimates in accounting, by the way. You know, you have a machine, you don't know a crystal ball, you know exactly how long it's going to last, but you try to get something that's reasonable and as close to it. And so it's going to last for 8 years. So, you know, logically you say, okay, well, everything we have to expense everything at some point, all these costs we have. It makes sense to spread it out over a period of time. So, you know, in this case, it's 8 years. So it'd be reasonable to say, okay, it's going to cost $800 for 8 years. So it'd be $100 a year. And so every year for the next 8 years, you know, we depreciate $100 of it. So it's really just taking that cost and spreading it out. Now, it's not really meant to find the market value. So, you know, you say, okay, you know, and if we go down to, if we go out 3 years, okay, 2023, so we depreciated, what, $300? So this is worth $500. It very well could be worth something different. It might be worth 600 or, you know, 500 or whatever. You know, it doesn't necessarily mean that it's going to be worth whatever it is on our books. It's not, depreciation is not really trying to find the value of it. But now some of those same things that go into the true market value is reflected in the machine itself. And what I mean by that is, as time goes on, a machine is worth less. It's less useful. It's probably less efficient, less, you know, so on and so forth. And so those same things that could make it obsolete or just old, you know, and could also be the same things that are driving the market price down too. So usually things do go down in value, most things. So this is in that way, it's sort of, it's similar to finding the market value, but that's not really the goal of it. It's something to allocate the cost. Yeah, so that's what I have here. So it's not really to find the market value. So, you know, after 3 years, you say, okay, minus 300, it's worth 500. Yeah, you can't really do that. It might be worth 600. It might be worth 350. It could be, you know, it could be worth less probably than 800 in both cases. But as far as actually finding the market value, it's not really for that. The residual value. the residual value is the estimate of the asset's value at the end of its useful life. So when we're done using it, that's going to be the residual value. So let's say that you have a car using the business, and if you plan on using it for 3 years in the business, you don't have to necessarily, and that's another thing. It's how long you plan on using it, not necessarily the entire life of the asset, but its useful life in your business. So if you are in a business, then you whatever it is, you need to get kind of a new car every 3 years. You depreciate it over 3 years. If you buy a car, you're going to hold on to it for many years. You'll say, okay, I'm going to hold on for 10 years. Hold on for 10 years. But the residual value is whatever the value you believe the car will be, an estimate of it at the end of its life, useful life to you. If you have own the car for 3 years, what's the residual value at the end of 3 years? You're going to hold on the car for 10 years. What's the residual value after 10 years, and so on. So it really depends on how long you're going to hold whatever it is. Residual value goes by different terms. Salvage value is one you're going to see the most. The book uses the term residual value. There's absolutely nothing wrong with that. But salvage value is the one you usually see. It can also be called these other things: scrap value, terminal value, ending value. These are all terms that you'll see out there, but they all mean the same thing. It's all what it'll be worth at the end of his life. Okay, I want to talk about one more thing. I think I already talked about this, but I'm going to go over it again just to bore you guys silly. I'm evil that way. I think I did this before. But just to kind of reiterate that we always have the accumulated depreciation along with the whatever the asset is. They kind of go along together. And the question is, well, why? Why don't we just write the asset down, to its value, whatever you depreciate out of it. So we have two assets. Accumulated depreciation for the first one is and the book value for that. So for each one of these, the book value is going to be the same. Sorry, that's my phone making a noise. Let me change this. Let me make this 20,000. Oops. So you have these two items that have the same book value, but so if you just look at the value of these two items, they're exactly the same. Equipment A and equipment B are the same on your books. They're both worth 5,000 on your books. So that's the carry value or the book value. But but A is a much bigger machine, and it's much older. it's almost completely depreciated. Started at 125,000, now it's down to 5. So it's likely that this machine is not long for, for the company. Whereas this one, got 8,000, depreciated 3,000. It probably had more than at least half its life left, and it's a much smaller machine. So you're probably not going to be buying a new one of B. It doesn't look like it's it's not depreciated a ton compared to what you paid for it, and even if it was, it's a much smaller machine. It's not going to cost you as much to replace. Whereas this one, you might be looking at a huge replacement bill, whatever machine this is. I didn't say, but whatever machine it is, it's probably expensive, and it's probably expensive today to replace it. So we keep this accumulated depreciation around because it gives more information to the reader. So, and this is one of those things that as you get used to reading financial statements, this is the kind of stuff that'll jump out whoa, we're gonna have a huge expense, right here. Whereas this, may not register as anything unusual. First of all, it's not as big, and second of all, it's not used up yet. Even though on the books, the dollar amounts are exactly the same. Okay, let's go to page 1, problem 1. All right, page 1, problem 1. The first line method we're going to use is called the straight line method. Remind me, and I'll tell you why it's called that. Okay. And the straight line method, so the truck was purchased by for $32,000. It has a residual value of $8,000 and a useful life of 5 years. So the straight line method is used. Okay, so here's the question. How much will this truck decrease in value over 5 years? And you can either blurt it out or put it in the chat.
$24,000.
Yep. Yeah, you're exactly right, 24,000. It's going to go from 32,000 down to 8. So this is kind of how we would put it in here. We say the cost is residual value, we will subtract out because we want to know, we want the difference between these two. It's going to go from 32,000 down to 8. And so this will give us what we call the depreciable amount. I guess I did need to go a little further on that. So the depreciable amount, so 32,000, so it's going to decrease in value by 24,000. Well, kind of logically, if this is going to last 5 years, how much would we depreciate every year?
$4,800.
Yes. So we'll take the depreciable amount, the thousand divided by 5 years. Is it 40, 24, yeah, 4.8. Let me stop that. Just, I realize how obnoxious looking that is. So this will be our depreciation expense per year. So every year we're going to depreciate this thing by 4,800. And at the end of 5 years, it'll have gone down in value by this amount. Okay. You remember my morbid, I remember the journal entries for depreciation. At the end of his life, it will be dead. This is depreciation expense. And be 4,800. This is accumulated. It's going to be exactly the same journal entry every year. So every year you can go $4,800. The first year might be a little bit different than last year. This is assuming it was born. It was bought on the first day of the year. So we're going to use it for the entire year of 2021. But so this will be the expense. So every year, basically, it's going to be for $4,800 in depreciation expense. Okay. So down here, we kind of have this sort of table. What's this thing, a truck? 32, okay. So our asset is the truck. And it costs 32,000. Accumulated depreciation is all our depreciation to date. So the first year it'll be 4,800. And the book value is this. Whatever the asset is, minus the depreciation. I gotta figure out how to write this in. That's going to equal the book value. So whatever this asset is, minus the accumulated depreciation, skip this for now. This will be the book value. So 32,000 minus 4,800 will give us 27,200. So this is what will be the book value after 1 year. Now the next year, this is where it gets a little bit tricky. The truck account is going to stay exactly the same. The truck account is going to be for 32,000 every single year. The only thing that's going to change is the accumulated depreciation. So this accumulated depreciation is all the depreciation to date. So it's going to have the 4,800 from last year plus the 4,800 from this year. Let me do it here first, maybe. So it's going to have what is that? 48 plus 48. $9,600. Okay, so we're going to have $32,000 minus 9,600 equals some number. 22,400. Next year is going to be exactly the same for the truck. Now, the depreciation expense is going to be that. You could just add, keep adding 4,800 onto that, or you could do them all at once. This plus that. $1,000. $32,000 minus 14,400. 17,600. you kind of get you get the idea here. There's gonna be 4,800 every single year. Now, the accumulated depreciation is really the thing that's going to change, as far as what amounts are these accounts. So 14,400. 48. And again, that's just all, you keep adding 48, 48, 48, 48. It's accumulating, it's just building. I'll take these out for now. They kind of look funny. Plus 48. And get away you. Now the 24,000, that should look familiar. And this 8,000 should look familiar too. So this is the cost of the truck. This is how much we've depreciated it. And this is the book value at the end of 5 years, but this is what we expected it to be at the end of 5 years. That's residual value. And we expected it to depreciate by 24,000. Any questions on that? Okay, so now I'm going to tell you why it's called the straight line method. It's called the straight line method because it goes down by the same amount every year. So every year it's going to go down by $4,800 for using the straight line method. And let me kind of chart it out here. So it looks like this. Hold on a second. So if this was the book value, and and this is the year. So at the beginning of the year, the first year, I'll put it year 0, 1, 2, 3, 4, 5. So for instance, this thing starts out as worth 32,000. And at the end of the first year, it's worth 27,200. And next year, it's worth 22,200, 22,400. And so, you know, this is going to go down by the same amount every year. It's going to go down by 4,800 every year. You know, every year it's going to go down by 4,800. So if you were to chart out the book value, it would go down in a straight line. It'd be a straight line all the way down. And so that's why they call it the straight line method. It starts out at 32,000. Every year it's going to go down by, the book value is going to go down by 4,800. So if you chart it out, it's going to be a straight line. So that's why they call it that. Okay. Let's go to page 2. Now on page 2, they say this is going to last for 10 years. We're just going to do the first couple years. So the first 2 years. So we're only going to do these 2 years here. We could do all 10 years, but 2 is probably enough. So we're only going to do the first 2 years. So see if you can figure that out. Oops. Those be again dead. Depreciation expense. And with this method, it's going to be the same every year. Every whole year that we have it, it's gonna be 8,000. By the way, if we had it for part of a year, you can imagine. So if we bought this halfway through the year, you do half as much. So if you bought this on July 1st instead of January 1st, half as much. So this is the machine. This could also be equipment. If you want to say it's equipment, that's fine too. Again, that account doesn't change. Okay, so every year's 8,000. Any question on that? So the key here, though, is the way we do the accounting is the asset itself just stays the same. Because we want to tell the reader, look, this is how much we paid for this. Let's not do that. This is how much we paid for it. This tells the reader, look, this is how much of the cost we've already expensed. We've expensed 16,000 total. This is every year, so 2021 will expense 8,000, 2022 will expense 8,000. Then over here, this is what the book value is. This is what's left over. Question on that? Okay, well, that'll be it for today. So I will be sending. I'll be sending out the exam, the chapter 7 and 8 exam. We'll be sending those out about, I don't know, 15, 20 minutes. And they'll be due next, I say Thursday? I think I said Thursday. Wednesday. Oh, okay, right. Well, plus 1 day. All right. So yeah, be looking for those out. The exam, probably like 15, 20 minutes. I'll send them out. And yeah, you'll have a week to turn them in. Any questions on any of that? And by the way, if you are missing work, turn it in. You don't get penalized, so you'll get the full credit for it. We're down to the last 3 weeks, wherever this is. So we have 14. We have next week is 15, and then 16, and that's it. So get them in, and the sooner the better. All the videos are there, so you know, if you need to go through the videos and to fill out the form, the handouts and all that kind of stuff, they're all posted. This one will be posted a little bit later tonight, but they're all there. So I would strongly encourage you to go to turn those things in, and I strongly encourage you to do it sooner the better. Week 16 is precious time. There's only, you know, you're going to have all kinds of stuff that has to be turned in that week. So this is a class you can actually turn the stuff in a little bit early, and then that'll free you up for you know, the other classes that have big projects due and all that kind of stuff. Any questions? Okay, well, you guys have a good evening, and I'll be sending out the exams shortly. All right, good night.
Thanks. Have a good one.
Yeah.